Welcome to this video from Kepsfield Academy. Today, we'll delve into the essential concepts of enterprise value and equity value in the context of business valuation. You'll learn to identify the components that contribute to a company's value, understand the significance of enterprise value in assessing a company's core operations, and define equity value and its relevance in stock market valuations. Before diving into the concepts of enterprise and equity value, it's crucial to understand the difference between operating and non-operating assets, as they play a significant role in determining a company's value. Operating assets and liabilities are essential resources that a company relies on to generate revenue and maintain day-to-day operations. These assets can be tangible, such as property, plant, and equipment, or intangible, like intellectual property, trademarks, or patents. On the other hand, non-operating assets and liabilities are not directly involved in a company's core business activities and do not contribute to its primary revenue-generating functions. Some examples include investments in unrelated businesses, real estate holdings not used for operations, or marketable securities. While these assets may hold value, they don't actively contribute to the company's core operations and require a different valuation methodology. A company's operating and non-operating assets are financed through a combination of debt and equity. In this course, we'll assume that all assets and liabilities on the balance sheet, except for cash and financing, are operating in nature. The treatment of other non-operating assets and liabilities will be addressed in our advanced valuation courses. Enterprise value, EV, is a measure of the total value of a company's core business operations, derived from the cash flow generated by its operating assets. Debt and equity holders finance the operating assets, making them the beneficiaries of the enterprise value. Debt providers are typically not entitled to any value beyond the debt and the interest on the debt that they have provided. The income for debt holders is reflected in the line Interest, Income, and Expenses in the income statement. The income of equity holders is reflected on the line Net Income. Net income is the income after all expenses of the company. Since the earnings of the holders of debt, the interest expenses of the company, typically stay the same independent of the performance of the company, all surplus value generated by earnings from operating assets above the market value of the outstanding debt accrues to the company's equity holders. In other words, a firm's capital structure influences the distribution of enterprise value among debt and equity holders. When calculating the enterprise value through a bottom-up analysis and subsequently deducting debt, you will arrive at the equity value. The value of equity per share can then be calculated using this formula. Share price equals equity value divided by the number of shares. For publicly traded companies, equity value is represented by the total value of all outstanding shares on the stock exchange, also referred to as a firm's market capitalization. A firm's market capitalization can be calculated as market capitalization equals the number of shares multiplied by the share price. We have now illustrated that enterprise value can be calculated using a bottom-up approach, such as discounted cash flow and multiples, or a top-down approach, by examining the value of a company's debt and equity in the stock market. We have seen that to accurately calculate a company's equity value, net debt must be subtracted from the enterprise value. Net debt is obtained by subtracting the company's cash position from its gross debt, which includes short-term and long-term interest-bearing debt. The cash position is deducted because it can be used to repay the debt and is classified as a non-operating asset, as it does not generate cash flow for the company. Want to fast-track your finance career? Explore our practical, comprehensive courses at www.kepsfield.com and accelerate your career today.